So what we're going to do in this video is talk about whether Bitcoin and Ethereum is over or undervalued, looking at ZIPF's law and Metcalfe's law. But not only am I going to show you the results of that, I'm going to show you how you can do the analysis yourself so that you can do this whenever you like. If you want to as well, there is a link in the description below where you can download this workbook and support the channel. Otherwise, I show you exactly how to build this model yourself. The results are fascinating. Stay tuned, watch through. If you want to just see the results, you can also skip to the end of the video, but I recommend you watch the process so that you understand the logic and the thinking that goes into this, and also how it's been validated by using Pearson's correlation coefficient, so a mathematical formula to check how well this leading indicator relates to the price of Bitcoin and Ethereum. Stay tuned. So for this video, we're actually going to do this on screen, and you know what that means. Let's go inside. So before seeing whether Ethereum or Bitcoin is over or undervalued according to Metcalfe's and ZIPF's law, let's just understand the calculation very quickly. So let's assume that in year one, we could say this was last year, we have a network called pink elephants or orange monkeys or whatever you want to call it. And that had a value of $1 million in market cap. Let's say that it had 100,000 users on that network last year. And now this year it has 200,000. And so the way you'd look at this, first of all, for Metcalfe's law is just to say, okay, well, it's the number of users squared. So all we do is we take that number there of the number of users and multiply it by itself. So I'm using Microsoft Excel here to do this, and you can see the calculation that I'm putting into the cell in order to do that. And now what I'm going to do is just copy that formula across over here to year two. And you can see that this is, by the way, not the value of the network. The value of the network is not 40 billion. This is calculating the incremental growth in the value of that network. So it's the number of users squared that Metcalfe's law says the value of the network should increase by. Meaning that if the value of the network last year was $1 million, then what we would say is we'd take the number of users this year divided by last year, meaning that it's a multiple of 4 because it's n squared and the number of users have doubled. So you can see, and if it's doubled, 2 by 2 is 4. So you can see it's a multiple of 4, and I can calculate that by dividing 10 billion into 40 billion. And so that gives me a multiple of 4. Now to get the value, what I could do is just approximate it by multiplying it by last year's value over there in terms of market cap, meaning that this year the value of the network should be $4 million. Now let's say that the value of the network due to the crypto prices or whatever is actually showing that it's only worth $3.5 million. You could argue that the network is undervalued according to Metcalfe's law. Now, if you watched the last video, you know that I'm not a big fan of this. I think that it's over egging it a little bit. And I prefer ZIPF's law because it brings logarithm into the equation. So with ZIPF's law, we do the same thing. We take the 100,000 users, but we multiply it by the log. So you literally just type in log, open bracket, the logarithm of those users. And you can see that it gives me a very, very different number to Metcalfe's law here. And so what I'm going to do is apply that to year two as well. Now, if we look at one divided by the other, just like we did before, what's the multiple? And I'm just going to break that out to one decimal place quick. We can see that it's a multiple of 2.1. Forget the dollar sign right now. I'm just calculating the multiple. It's 2.1. So let's get rid of that decimal place because who cares about decimals? And multiply that by the value. So according to ZIPF's law is saying, no, the value of the network is actually only $2.1 million. So now I know that if I'm valuing the network and the network is saying, you know, the total market cap, let's say, is something like, you know, 2 million or 1.5 million, then I know, no, this network is very, very likely undervalued right now because ZIPF's law takes the log. It says that, you know, there's going to be a proportionate amount of value in that network. Not everybody is going to be able to connect with you, as we were explaining in yesterday's video. So now let's actually apply this to Bitcoin and Ethereum. So the first thing I'm going to do is I'm just going to call this calc, this tab over here. I'm going to create a new tab and I'm going to call this BTC data, you know, meaning Bitcoin data, Bitcoin price history data. Coin market cap, and it'll take you to the page on coin market cap. So all we want to do down here is just select, I'm actually just going to select all time, even though we won't be able to do this for all time, and I'll show you why in a minute. So now what I can do is just copy this data. So I'm just going to highlight my mouse. I'm going to scroll all the way down and I'm going to hit Control C. So this is copying the data. Then I'm going to head over back to our Excel document and hit Control V. And so now you can see that data's in there. I don't like how wide the cells are. I'm a bit funny when it comes to data. Like, it needs to be neat and tidy. Otherwise I break out in hives. So let's go down here. I'm going to highlight all the data. And by the way, to do that, a quick way to do it is just to click on the cell, hit Shift and space. That'll highlight the row. Then Control Shift and the down arrow, and that'll highlight all the data. If I hit Shift and only hold Shift and up and down, I can then navigate how many rows I want. I'm going to find the edge of this, just double click on it, and that has now concised the data for me. What I also want to do down here is just delete all this guff because we don't need it. I don't want these funny pictures or anything like that. And there you go. Now you have Bitcoin's price history data right here. Now the next thing to do is to put in the number of unique addresses. By the way, you can also use the number of transactions, but I actually found the correlation was stronger when you use the number of unique addresses, as mentioned in the previous video. And the reason for that is logical, because it's more accurate as to how many users must be using that network. Bitcoin unique addresses data. And it should take me to blockchain.info or blockchain.com. You don't want to do this for all time. What you want to do, because it doesn't give you every single day, I want to do this for, say, the past 2 years. So what I'm now going to do is I'm just going to go there and I'm going to click on the CSV icon over here. I'm going to hit save file, so okay. Click on this little blue download arrow and then hit the Excel file. So that's opened up the Excel file, and if I scroll to the very bottom, yeah, I can see yesterday's date there, the 4th of November, the 3rd of November, and you can see that the days are in consecutive order over here. Now we have a minor problem over here, which is where the date and Excel isn't reading this right now as a date, but the date here is in reverse order to the number of unique addresses. So the number of unique addresses, the latest date is at the bottom of the data, whereas here it's at the top of the data. So what I want to do is I just want to put in here something like unique addresses. We're going to add this to the data. I'm going to punch in that heading there. I'm just going to neaten that up a little bit. And then what I want to do here is actually reverse the order of the data. Now, one very quick way to do that, because this actually should be in timestamp order, is just to go to data, highlight the data, go to data, sort. We're going to sort it by column A, and we want it in terms of newest to oldest. And so when we do that, now we can see the 4th of November is at the top of the data, the 3rd of November, etc. So this is much easier to use. Now, what I'm going to do is copy all of this unique address information, just like it is here, and I'm going to paste it over here. So now the number of unique addresses being used each day is now here in this column. But what I want to check, if I scroll to the bottom of that data, now a quick way to do that is to click in the data and hit Control and the down arrow. It'll take me to the bottom. That says that I should go as far as back as the November the 5th, 2016. So I just want to check that here. Is it taking me as far back as November the 5th, 2016? Yes, it is. So I know that the days are in order. They match exactly. And this is very important. It's a very important check over here. So we've downloaded the last 2 years. So anything, before this doesn't really count. I don't really care. But now we have the number of unique addresses. If you go back to our calculation, the next logical thing to do is to actually multiply that number of unique addresses by themselves. And that's exactly what we're going to do over here. So we're going to go unique addresses, and we're going to go, I'm just going to put in here M for Metcalfe. So I know it's Metcalfe's calculation. So I'm just going to take that and multiply that by itself. Now that's giving me a rather large number, so it's giving me this funny syntax over here. One way to get rid of that is just to right click, hit this little comma over there and get rid of the decimals. Then what I'm going to do is on this little square at the bottom here, double click on that, and that's going to drag the data all the way down for me. Now I don't need it from here onwards, so I'm actually going to delete those formulas and just make sure that it comes to the bottom of where this data actually ends, which is the number of addresses. Okay, so before we move further, the first thing we want to do is test whether this data that we're using is actually useful. And the way to do that is to use Pearson's correlation coefficient. This is a mathematical formula that tests how relevant is one data set to another, how well correlated is it. If it's a correlation of 1, that means it's perfectly correlated. If it's -1, it means it's totally uncorrelated. If it is 0.5, that means it's kind of 50-50. This is a very important calculation because it tests the quality of our workings over here. So the first thing we want to go and do to do Pearson's correlation coefficient, which is the format we're going to use for this, we're going to go Pearson, open bracket. And the first thing I'm going to do is use maybe the close price information. And I'm going to go back as far as, let's say, all the way back to the beginning of the year. So Jan 1st. So I've highlighted that data. Now I'm going to hit comma. And I'm going to do the number of unique addresses according to Metcalfe's law, close bracket. And you're going to see that my correlation coefficient here is only 0.69, which is actually not that bad. That means 70% of the time or 69% of the time, the amount of unique addresses is very much correlated to Bitcoin's price. This is actually fascinating. This right here is fascinating if you really think about it. The number of unique addresses being used changes like this day to day. I want to smooth that out. And a very good way to smooth that out is actually using moving averages. And so what we're going to do is calculate our own price moving average. So I'm going to insert a column here. You can either right click insert or do what I did, Control-Shift+. And I'm going to take the average price first. So I'm going to say average price because that's the first thing I want to do. I don't want to choose between high, open, high, low, close. When you're doing this, you can do it however you like. I just want to take the average and I'm going to double click and that's going to go all the way down to the bottom of the data. Then I'm going to, again, go Control-Shift+ and I now want a 30-day moving average of price. Moving average of average price. So what I'm going to do is now go average and this is going to smooth out the lumps and bumps. It's going to give me the average price. So I'm going to highlight this data all the way down to 30 rows worth. So you can see right near my mouse, there is, I want to kind of point with my hand, but there is a little thing that says 30R. That means I've gone 30 rows long. It's very helpful. So close bracket, enter, and I'm going to double click. And now I have 30-day moving average of price. Now let's compare the correlation of this data. I'm going to drag all of this along to the average price. I'm still at 0.69. But now let's add in the 30-day moving average of the unique addresses. And that's very easy to do because all I'm going to do is take my 30-day moving average of price, copy that column, click over here and go Control-Shift+. And that's now moved that for the number of unique addresses. So now my number of unique addresses is smoothed out. What I'm going to do is change this formula. So hit F2 again to edit the formula. Drag the formula into this cell over here, hit enter, double click, let that drop down. You can see that I've gone from a 69% or 70% correlation, which is strong as it is, to 88%. What we're saying here is that 12% of the time over the last year, the price of Bitcoin smoothed out, according to the number of addresses smoothed out, is not driven by the number of unique addresses, 12% of the time. But 88% of the time, it is. So this is actually a fantastic metric. This is a great way now, a very objective way to look at, hey, is Bitcoin under or over valued? Because now we can actually rely on the data that we're using. And using this 30-day moving average trick, you could call it, you can test out different days, you can drag different days, etc. You'll get different results. One thing I want to point out, this is very important that you understand this. If I drag this all the way down to maybe not just the last year, because obviously there's been a lot more adoption in the last sort of 18 months, but let's drag this all the way to the bottom of our data set here. And I'm going to do the same thing here with this one. So the two columns have to match exactly. And so I'm going to drag that down. Now you can see we've gone to a 45% correlation coefficient. What we're saying here is that because the number of addresses or the number of users was much smaller, really this Metcalfe's law and applying this to a network becomes a lot more relevant as the network gets bigger. Now, because of the amount of adoption that's happened with Bitcoin, the data's become a lot more relevant over the last year. So something else very interesting is also going on here. If you think back to Q4 of 2017, the prices went completely haywire because of the FOMO, new people coming in, you know, buying Ethereum, buying Bitcoin so that they could buy every coin under the sun that they felt would take them to the moon. And of course, that is going to cause price to go completely out of whack. And when price goes completely out of whack, the correlation should go down. So actually, if you drag the formula back for Pearson's correlation coefficient, you should see that the correlation at certain points in time was very actually uncorrelated because price was behaving very, very strangely. Now, one could also argue that if people are buying into the network, that is adding another transaction and adding another unique address. But I think the buying behavior that was also driving the fluctuation in price, was outside of that. And that also would have caused the correlation to be a little bit more out of sync. So I'm going to hit Control Z and undo that last change we made and go back to just looking over the last sort of year. And that's going to be a lot more beneficial for us. So that's 88%. So now let's calculate this according to ZIPF's law. So all I'm going to do is type in unique addresses. And I'm going to put in here Z. And same sort of calculation. I'm going to go equals the 30-day moving average. Oh, we should change this. Sorry, 30-day moving average of addresses. My apologies. So what I want to do is take that multiplied by the log, if you remember our calculation from earlier, of that, enter, and I'm going to remove some decimal places there, and I'm going to copy that formatting, Alt-E-S-T, or you can just go paste special format if you're using your mouse, double click on that, and now I've got the unique addresses according to ZIPF's law. Let's change the correlation check to ZIPF's law. We're going from 88 to 87.5 correlation. So arguably here, Metcalfe's law might actually be more useful. So when I looked at this 10 days ago, they were virtually the same. They still are virtually the same. But I prefer relying on ZIPF's law because it just feels more conservative by nature. So one thing we could do now is go back. We can look at what the market cap was of Bitcoin a year ago, multiply it by the change in unique addresses according to ZIPF's law, and see, what should the value of the network be now according to the value of the network on CoinMarketCap. But I actually don't see much value in doing that. What I think this is more useful for is to identify trends. And so the best thing to actually do here is to put together a chart. And so what I'm going to do here is I'm going to add a tab. I'm going to call it BTC chart. And I want to paste this data across. So what I'm going to do is I'm just going to copy all this data all the way down to where I care about it, which is going to be December of 2017. So I'm going to hit Control C. I'm going to go to my BTC chart tab, paste special or Alt ES, and then V for values. And so now there's no formulas in here. It's just the values. I'm going to make the titles bold again so I can see the titles easily. And now we're going to put in some charting data. Now the thing is with Excel, the chart usually reverses the axis to what we're seeing here in terms of date order. So what I'm going to do is just punch in a new column and go number. I'm going to put in the number 1, the number 2, the number 3. Then I'm going to highlight all those, double click on this little square, and it's going to just rank all of these in order. So now what I'm going to do is change the order of this data. So Control Shift down, data, sort, and I'm going to go to the very, very last column, which is number. And I'm going to go largest to smallest. So now it's the old data that I'm seeing first. I don't need this number column anymore, so I'm going to delete it. So now what we can do is highlight these dates here, and we can highlight the 30-day moving average of price here, and we can highlight the number of unique addresses here. So I'm going to go Insert, and I'm going to go Chart. So I want a line chart. I'm just going to pick this first one over here. And so now we have a chart. So what I'm going to do is actually cut that, Control X, click up here, Control V. I'm going to drag that chart to the top, and I'm just going to make that nice and wide and big so we can see it. So the orange line over here is the number of unique addresses smoothed out according to the 30-day moving average. And the blue line over here is just flat because it's a totally different number. And on this axis and scale, it makes no sense. So I'm just going to right click on that, Format Data Series, and I'm going to click Secondary Axis. And so now what that's given me is the 30-day moving average of Bitcoin's price. And this chart will look very familiar to you if you've been following the recent videos, because I've included this. In fact, I included this on the Crypto News, the first episode video. You can see here's the price moved out on the 30-day moving average, and you can see ZIPF's law here as well. If I want to change it from being ZIPF's law to Metcalfe's law, all I have to do is drag that over there. And I also need to drag this over here. So according to Metcalfe's law, it tells me exactly the same thing. It tells me that the number of unique addresses has been trending upwards and the price has been trending downwards. So I'm going to undo that now again because I like looking at this according to ZIPF's law. I find that it just matches better. You know, it's the same thing here. This is telling me that Bitcoin is growing, yet the market isn't really reflecting that, and that tells me that we should be due for a price correction. Now, I'm going to do this very quickly for Ethereum, but I hope you're very interested in this. Let me know what you think. Should I be looking at this compared to price, or should I be looking at this compared to market cap? Is that a better way to analyze the data? So I'm going to go ahead and I'm going to build this for Ethereum now as well and show you at the end what that looks like. Okay, so I've just finished putting the Ethereum data together and the results are very, very interesting. This is the first time I've actually looked at Ethereum in this way right now. So this is fascinating. The price, of course, has been trending down very, very heavily. You can see it there. The number of unique transactions, I didn't use addresses because the data that I could get for addresses wasn't in the format I needed it. And so I just very quickly used the number of transactions. Technically, addresses should be more accurate. However, what I would say when I look at the data and the correlation, it is 89% correlated. So using Ethereum transactions smoothed out by the 30-day moving average, and you compare that to the price smoothed out by the 30-day moving average, gives you an 89% correlation. That's good enough for me. So I'm really, really happy with the way this turned out. You know, Ethereum, again, is a very, very large network. I mean, I'd say, is it larger than Bitcoin's? I'd say so. So this is a very good data set to use. And you can see that the 30-day moving average of price heavily trending down. The number of unique addresses, transactions according to ZIPF's law, also trending down, but not nearly as much. So one could argue that there is some divergence going here, that Ethereum is actually slightly underpriced. But I'd say, you know, if we compare the two charts, so Bitcoin, where it's trending up and the price has kind of been going down and flat, compared to Ethereum, I'd say right now the divergence is greater for Bitcoin. Now, one of the things you can also do is just chart the correlation itself. So you could drag a correlation formula down and see over time how well correlated are the two. And so maybe place a trade or an investment decision based on the changing correlation. There's so many different ways you can look at this. One of the things I'd be interested to do is to compare this to market cap. So if you're interested in me doing that and showing the results, then absolutely let me know. That would be as opposed to comparing it to price. So you can support the channel too by downloading this workbook. I'll put a link in the description below.